Welcome to Bitcoin Escape Plan. Bitcoin is dead. You may have heard the news. Long live Bitcoin. Today, we're going to go over why this most recent drop to the downside is really nothing to worry about, just business as usual. And even though it is pretty severe past a couple key signals and targets that we've been looking at, it's still within the broader trend of what we've been expecting here on the channel for a while. And therefore, nothing to worry about, just bear market blues. So, we're going to go over the 4-hour chart first, as we always do, just to see kind of the general trend of what's going on in the video. And then later on, we'll go into the higher time frames just to get a more clear picture of where has this happened before, how similar is it to what has happened before. If you're new here to the channel, you can go over to bitcoinescapeplan.com. Every Monday, I release a breakdown written of pretty much everything that I anticipate of the key levels in here, just shorter so you can have it in your email. Today's will be up right after I'm done uploading this video. You can go check out the website, bitcoinescapeplan.com. About to have a bunch of new stuff on there. Very exciting. Let's get into Bitcoin. All right, so I'm not going to sugarcoat it. This is bad news. So what caused this is, I guess there's some news around the Trump tariffs, and how a lot of major corporations are going to be suing Trump, I guess, in order to get money back from what they had lost in not being able to do business during that time period. I don't give a shit about the news. You already know that if you follow this channel. I don't care. I care about the chart. And what happened on the chart that we need to pay attention to is right here. This is the 4-hour anchored VWAP. This is the middle band. We've been talking about this on the channel for a minute. We had our first break in early February, which set a bearish trend, period. That's what happened, is we had already broken down from the upper band, and then we had an interaction with the middle band. An interaction with the middle band from the top down to the middle band is not a bullish signal, period. There's no way to interpret that as a bullish signal. The only way to interpret it as a bullish signal is for it to go all the way down below it for a while, and then make its way back up to it and break back above it. So we still need to see that full progression, which will take a very long time, a period of several months, in order for that to happen. So we need to expect and anticipate that the price will start to continue to get pulled down below that. Where is the level currently? It's currently sitting at about 65.7K, which is about where we interacted with it here as well. Actually, no, this is slightly lower by the time we interacted with it over here. These candles have a close at 65.7, so it was slightly lower at the time. But that's what we were looking at for over here. I mean, you couldn't, again, I never redraw this tool. For anyone who is like new to this channel, this is a tool that's drawn from a candle in 2011 that I've had on my chart for probably like 5 years, like a long time. So for the price to go that close to it at a major pivot is like, I don't know, like people want to make it complicated to track Bitcoin, and it's just not. I don't know why they do that. So you can kind of ignore these trend lines. Obviously, this trend line is invalidated. I am actually gonna clean that up later, but I don't want to do that on the video with you. But this is where we had the major break of that trend, which flipped us with enough bearish momentum in order to get us back below that anchored VWAP. So this trend that we have been seeing here, where that previous touch where we closed right above it, which could be viewed as bullish continuation, when we hit it most recently, we just wicked to it, which was a good sign. That was a good sign. Even though we wicked to it, it still closed way above it. Great sign. This, however, not a great sign. Complete opposite of a great sign. Not only did we close way below it, we wicked way below it. You know, we wicked to, this says 64.2. And if we think about the higher time frames, the higher time frame pivots, 64K is the important weekly and monthly pivot. So we were $200 above that weekly pivot, which is not good. It's not a good sign to start the week at that point, because you have to remember as well, this happened after the Sunday close. Yeah, that happened like right, I think that's exactly the Sunday close almost. Actually, we would see that reflected on the daily. Yeah. That's where the day opened. It's right there, and then dropped off a cliff. So the short-term momentum is entirely dependent on where we are in relation to that 4-hour anchored VWAP. Currently below it. We just started breaking below at it's 8:11 right now, so 11 minutes ago we closed below it and started to go lower. This level here is an older daily close, one of the previous daily closes. I would assume probably Thursday-ish. And the momentum is bearish. Like this, I don't know how to sugarcoat it. Like, I know people hate hearing that, but the momentum is bearish while we are below that middle band, and we're going to get pulled lower towards the lower band. The lower band is currently sitting at about 35.7K. Now, I don't think we hit it immediately, and we can jump over to the higher time frames now. I don't think that we hit it immediately. There's a couple things that we're going to hit on the way there. The important one, I would say, is this 64K pivot. Again, we got to remember the context. The 50% retracement from the 126.2 all-time highs would be 63.1K. This fib pivot on both the weekly and the monthly time frame is sitting at about 64. And I believe the daily just got pulled slightly higher. I think it got pulled to 65, or maybe it was the 4-hour that got, yes. 4-hour just got a new fib pivot based on that break that we saw at the end of Sunday going into this morning. So that part of it could be viewed as support. It really depends on where the price continues to go this week. Like I talked about in the newsletter this week, the month closes on Saturday. The week closes on Sunday. So depending on where the month closes in relation to the 64K pivot, it is going to put a lot of pressure on where the week closes. Now, as you can see, the week has a lot more pressure towards that 64K pivot than the monthly does. The monthly, that looks pretty ugly as well for us to start the month above the 60 or the 76.2K pivot and just to rip right down towards the 64 and to close again. We need to close preferably no lower than it is right now, but I don't know how you would interpret that as bullish. That's still so close to that Fibonacci pivot, so close to the 50% retracement mark, where it's like, for all the people and all the channels that are like talking about how there's gonna be new all-time highs, like right around the corner, like I don't see it on the chart. I think those people are crazy. So if you want to follow someone who like, actually, I'm just going to tell you the truth based on what the charts tell me, welcome. Thanks for hanging out. So that's what we're looking at the moment. Is the monthly is going to close Saturday evening, and if it closes close to that 64K pivot, then the first thing that's going to happen on Sunday is it's going to push that price down below on the weekly. The weekly is then going to close comfortably below the 64K pivot. And the only thing that's preventing us otherwise is if we can close the week somewhere up here. I would say above 70.2. 70.2 is a pivot that we had been watching. But that's all the way up here. We would need the price to climb like 8% from where it is right now over the course of the week, which is not impossible, but it would require a reclaim here of the daily SMA to the upside, and that doesn't really look like it at the moment. That technically could be viewed as an invalidation, and maybe that's what's pushing it lower. We did have an uptrend on Saturday that was invalidated going into Sunday. Sunday did close lower than the low on Saturday as well, or technically right above it, but it had wicked lower. So, that's the only thing that could prevent this major breakdown going into the beginning of March is a flip of the daily SMA, period. Like the 4-hour, like I said, our best case is we can get above the middle band of the anchor VWAP, but the fact of the matter is we don't have to touch the lower band, but once we have broken through the middle band, it is more likely that we head in the direction of the lower band than it is that we head in the direction of the upper band again, which is just going to continue to pull the price down. You know, if we zoom out for the historical context, you know, what we're seeing now is the Bollinger Band on the bottom has continued to rise and rise and rise and is now starting to flatten. And this is the example that we have over here on the chart most recently. This is June of 2022. So it had already started to slow its descent. Again, we're earlier. You know, you got to remember that in context, that on the chart wise, we're already at May, essentially, in terms of having broken down from the monthly SMA and properly given it up. You know, we only had these 3 months of chopping around at it less convincingly than in previous bear markets. In previous bear markets, we held on to the monthly SMA for longer before breaking down. We're already pulled forward, you know. So that's why I think it's a little bit difficult to time for the timing specifically of the bottom. I don't think that the range will be quite as hard. Like I said, I think it's 34 to 39K. I've talked about that in a bunch of other videos. Somewhere in here. I mean, whatever, if it goes to 32, I don't really give a shit. The difference between 32 and 34, if that fucks you up, then you're over leveraged. I hate to break it to you, you know. For anyone who's just buying spot at those levels, you're not going to be upset. You're going to be very, very happy. So I really think somewhere in there, like 34 to 39, there's enough. That's kind of like the highs of here as well. What is that? That's 31.8. So what that means is, like, that range, and like for people who really have known me for a long time, I was calling that out in 2022, 2023, where I knew that 20K, around 24, 25K, and 32 to 35K were going to be super important. And Price spent a ton of time there, and that is going to form a decent amount of support. That's why I really think like that 34 to 39 being like the absolute bottom is primarily because of all those people who bought on the way from about 20 to 32, 35. Everybody in here in 2023, that helped to eat up that candle, the major drop in June of 2022, which again, we may be about to see that early. That may be March or April that we see another mega drop candle, but we've already kind of had it. You know, like this might have been the really violent one, and now we see 6 months of just kind of chopping between here and this fib pivot, which would be another, another 30% lower, which I think is very likely. I think that's going to happen. Like I said, it may take the full 6 months. Timing the absolute bottom, I think, is a fool's errand, like trying to do that exactly. The history would tell us it's probably October is when it normally takes about 12 months from the peak to the bottom. But it does kind of look like we're pulled earlier in the cycle than normal. Again, where we are right now in the chart in February looks more similar to May, and in previous cycles it's like we're way early, you know. So this, we still had the 50% retracement by about February, March, and then we have a rally going into April, May before that's when we capitulate. In 2018 was not until like September, August. So like we're way ahead of that, like so far ahead of that in terms of like actually giving up the monthly SMA. And the 50% retracement mark is just kind of like a signal of like the temperature check of what's going on in the market. But the SMA is really what we need to pay closer attention to. And the SMA, we're nowhere near it. We're nowhere near it. At this point, again, for anyone who's been following the channel, I have completely given up the possibility that we're going to retest 96K. It's not going to happen. It's not going to happen. Say bye-bye to 100K for the rest of the year. We're not going to see it. You know, we're going to continue to see a sustained breakdown, and even whatever, it's the 6th month. So even if we do start to see a recovery by whatever, call it August, September. I mean, September is historically bearish in the first place, so I wouldn't really expect a recovery to occur then. That's probably maybe closer to the absolute bottom. But again, it's like I think it's kind of foolish to try and say exactly when it will bottom and to focus more on how are you going to behave when it is closer to this 44K pivot. And if it goes lower than that, it goes lower than that. Cool. But at 44K, I would anticipate if price is going to move similarly to how it has in the general trend. I refer to this as the napkin math. If the napkin math is going to hold, then whenever we bottom at whatever, like 30, 30 and change, 34, 39, whatever the fuck it is, I would assume that the next psychological peak is probably somewhere between $200,000 to $250,000. That would be by 2029. So if that's the case, let's see real quickly what, I'll do 240. So $240,000 divided by, let's call it 35K, is about a 6.8x, which we're probably not going to get. We just got about an 8x from 15.4 to 126, I believe is about an 8x. Let me double check to see the exact math on it. But what we expect is for that trend to become less severe over time. It's about an 8x, 8.2x. So I don't think we're going to get a 6.2x, honestly. It kind of depends on the narratives of governments and corporations buying it is huge. You can't really knock that. Like there's a substantial structural difference between when that is true versus that not being true. When it's not true, there's no reason for trillions of dollars to come into the market and then basically invalidate all of previous history, which it's very likely. We don't have to look any further than the gold chart for that. There can be periods of time in an asset that is purely supply and demand based where it just fucking rockets. And obviously this is less percentage than Bitcoin does during many time periods, but like we kind of have to remember that as like the broad context of what is this thing that we're holding and stacking more of. Well, this is an asset that trades 24 hours a day on emotions, purely on emotions. It's on what people believe that the value is. So if trillions and trillions and trillions of dollars start to flow into the asset class over time, like it will take time for trillions move slowly, it doesn't happen all at once. Like it'll feel really intense when we're back at 100 again, and then we're snapping towards 200 quickly. But it won't be. I don't think it'll be as predictable as before. I think it will be like pretty violent to the upside, and you either have some or you don't. Like that's a big point of this channel is like I just want to help people stack more Bitcoin. You can do whatever you want with it. I don't care if you want to sell it at certain levels. It doesn't matter to me. It's not my Bitcoin, it's your Bitcoin. But yeah, like I think it's going to get more chaotic once the stable coins actually go into full effect, because money that normally would have flowed directly to Bitcoin is now going to be able to flow towards real estate. It's going to be able to flow towards, tokenized stocks. Like the general value prop of Bitcoin is going to get messy, I think, once they actually tokenize NVIDIA and Google and Apple and all these other companies. I think that we really might see, I've talked about this in other videos briefly, like an extended bear market for Bitcoin is something that we've never experienced before, and that we would have to, it would really test conviction. If for a cycle we did not get higher highs, like that would probably fuck up the next cycle, and you would really have to decide, and this is for the people who are watching this late into the video. I know that you're someone who is like really, you're invested in how much Bitcoin should I be holding, how much should I have, and like you would have to make sure that your portfolio can survive a potential extended drawdown. I don't think it'll be longer than say 4 to 8 years, but that's a long time, to go a whole cycle where it may not go past a certain value. I think personally, anyone who is below 50K with their cost basis, you're probably fine for life. You're probably not going to have to worry about it. But specifically for 100K plus, I think there's real possibility where it is going to be a while where you have to watch your portfolio sit in drawdown, depending on like how severe the pullback is from the AI bubble, as well as just the repercussions of those corporations cutting all those jobs. It's starting to increase, I believe. The unemployment rate is increasing because all those companies are just trimming their workforce. So I think it's going to potentially get very stressful for Bitcoin if this money from the corporations and the governments does not actually, I mean, the corporations have been flowing, but a lot of them are down. MicroStrategy does not look like an appealing stock right now. We can go look at that for a sec. Where do I even have MicroStrategy? Here we go. Look at that. Does that look like a fun stock to hold right now? No, it does not. I am of the opinion that that's one that like probably will, I think it'll stand the test of time. I think Michael Saylor is writing the book on how to build Bitcoin batch credit. And that's a pretty severe first mover advantage. So I don't think that they're going anywhere. It would take, some pretty intense, like bankruptcies or like whatever fraudulent things to pop up for them to actually take that away from them, because otherwise they don't have to pay the loan back until 2028. And the only way that that really happens is if they just continue to extend how long it takes for them to agree on the crypto market structure bill, as well as for the stablecoins themselves, which again, I believe they have until July to formalize the stablecoin, the Genius Act or whatever. And it's my understanding that that doesn't go into effect until 2027, the beginning of 2027. That's the earliest that stablecoins could go on live with the major banks and start passively flowing into things like Bitcoin. But I really think it changes things quite a bit if those stablecoins go live, and if the first thing that the banks are trying to get you to do with it is to get a home loan or to buy a car, just basically to do anything other than transfer stablecoin here, buy Bitcoin here. Like if they don't link that, if they don't make that like a normal thing for people who are transacting in stablecoins, I think Bitcoin gets very boring, very fast, unfortunately. And it's just like the ultra wealthy and the people who are in the know that continue to buy it. And it might be boring. Like there were people who were still buying gold when it looked like this. There's a lot of people who bought it when it looked awful, so that they could profit from that. And I do think that we are going to get that for Bitcoin, but it's just going to come, I think it's going to take a while. Like, I don't think that it's going to come all at once. It might feel that way, when we zoom out, but for anyone who's holding through this entire experience, I know that it's stressful. That's part of why I'm making videos for you guys. It's like, I'm not stressed about it. I'm not worried, like I just need to continue to stack more over time. And I believe in what the asset actually does. It stores value very well, similar to something like gold, but with less, like immutable properties that make it hard to transfer through time and space. There's just a lot on paper that makes Bitcoin an attractive way to store the value of your money, which is attractive to governments, which is attractive to corporations. Like, I don't think anything has changed about the broader narrative, but the price itself may get really boring for an extended period of time, and you need to prepare yourself for that possibility. I think the highest likelihood is still, again, that we see that bottom somewhere between, let's call it July and October. It really depends on like how violent the stock market, gold, and real estate react to, I keep referring to it, the UFC event on the White House lawn. That is the bread and circus to prevent people from revolting. However, the stock market, real estate, and gold market are behaving at that time. I think it's going to give us a really clear indication of what's going to happen to Bitcoin, because if everybody else is fearful, Bitcoin is going to sell off, period. If everyone else is super bullish, why are they going to switch into Bitcoin, which again, at that time will still look ugly, So I don't think it's Bitcoin's year. Bitcoin is dead, long live Bitcoin. You know, it's like there's nothing to say about it other than we gotta see how long it takes for us to consolidate or chop down to that 44K pivot. It took us no time at all to break through 80, you know, down to 64. That took us, again, the course of 1 month, essentially. I mean, charitable if you want to give it a month and a half from wherever the wick was in January. But for the most part, you know, that happened very quickly. There's nothing preventing us from dropping down to that 44 and then just chopping. Like, look at this, 1, 2, 3, 4, 5, 6, basically 6 months where it would have stayed at this level before dropping down lower to that 15.4 mark in November. So it'll take like one other major news event in Q3, Q4 that will like actually break us through that 44K pivot potentially. But that's what we are looking at, is over the course of the next 6 months, we're either going to break down violently towards that pivot, where we might break down in fucking March or April towards it and then just chop around for a while. But that's our baseline assumption. It's pretty similar it's less time in 2018. But again, in 2018, we held on to the SMA longer, and then 1, 2, 3, 4, 5, 6 months before we started to recover. I mean, Donald Trump was president then, so there's a possibility that there's some similarities. And then we have a quick rise in 2019 before it fails down again. And I would anticipate that's probably, I talk about this a lot on the channel, the news stories. If we only get to one news story for the whole year, the news story for 2026 is how low can Bitcoin go? The news story for 2027 is, can Bitcoin get back above 100K? And it's kind of a more compelling story if we break down super, super low. So it takes either all of 2027 to recover, or it snaps very quickly for it to recover, it get back to 100K. And then it kind of remains to be seen if it's going to give it up again, or whether it's going to be able to maintain momentum once it gets there. So that's what I say is, like, just in general, psychologically, 100K is super important. And I don't think we're going to give it up just because price hits higher in 2029 to like 210, 250. 210, 250 is not as important psychologically as 100K. Like, I really think that 100K and a million are the only two prices that matter. That's it. Those are the only two prices that matter. 500K is not as important as 100K and a million. It's close. It's probably the third most important, but 250K and 750K are not as important. They don't roll off the tongue. They don't excite the mind as much, you know, as those other numbers do, even though they're higher. And the psychological weighting, I think, does have a significant factor in how the price actually moves, because that's what it is, you know, is people having feelings and trying to express that on the chart. And it's very simple. That's how a supply and demand asset functions, especially one that's available 24 hours a day. So let's wrap up the video. That's what we're looking for in the moment, is how close can we close to that 64K pivot for the weekly and monthly. If the weekly closes, or rather if the monthly closes below that pivot, it's going to push the weekly right down into it. And we're going to violently come down towards the bottom Bollinger Band, which is currently at 54.5K. But there's nothing preventing the price from dropping below it. It's not a hard support. It's just a price level that gives us information about what is going to happen in the chart. And there is a previous pivot here of 53.4K that may be that access support, but I don't really think so. I think that we are at those levels. We're already basically below everyone who bought the ETF after the month of February in 2024, and they only launched in January. So that would be a significant portion of those ETF buyers. And that's why we have to wait. We have to see if the conviction of people who are not willing to buy Bitcoin directly and want to give BlackRock their money to hold on to instead, and Fidelity and everybody else who's got a Bitcoin ETF, those are the people that we need to not panic when the price is between here and 44K. So if your grandma bought a bunch of IBIT make sure you're talking to her about not panicking right now, or she's going to get rinsed. You know, a lot of those people are going to get rinsed because that's their first cycle, and a lot of people lose money their first cycle. So that's what we're looking for, is what is the conviction of those people who don't even want to hold the Bitcoin themselves? What does that do for the price between 64K and 44K? And then I do think, again, later in the year, we would expect a breakdown further than that before we're able to start to recover towards 100K again. Not until 2027, in my opinion. I don't really care about the news. I don't really care about the news for this. All I care about is how it reacted to the 4-hour anchored VWAP band. And it did not react well to it. So that's all I really need to know. So thanks for watching, everybody. I'll release another video on Wednesday. Again, I have some really exciting stuff coming up on the website that I'm stoked to share with you guys. Been working really hard on it. And thank you again. See you on Wednesday.